Good morning, everyone. This is Audrey Boisno with Mortgage Pros 411 and Kevin Casey, my co-host. Mr. Rob Chrisman, how are you this morning?
I'm good.
Good. That is
I'm
a
good.
big, cheery smile you got going there today.
I continue to hear stories about people who are worse off than I am, and that doesn't necessarily make me happy, but it makes me try to appreciate what I have, uh, and that my house wasn't just wiped out by a hurricane or a forest fire. So
Yeah, no.
Yeah,
yeah,
it's funny you
there's a
say
lot
that.
going on.
I had a conversation with a client yesterday who, when I talked to her earlier in the day, was a little worried about their current financial situation and should they do this and should they do that. And by the time I talked to her later in the afternoon, she had had a few other conversations and had spoken to people who had the most god awful list of things going on in their life. And so, yes, I think that we can take a lot of um
Yeah, well, didn't we have that conversation, Audrey, last week? We were down in Southern California and we ran into that woman from Florida that had water up to her doorknob
yeah,
and it's
yeah.
That's
still
one way to put it.
yeah, and still there. And this was days after the hurricane. That's crazy. I'm glad I didn't get that one.
Oh my God. Okay. Just want to say quickly that we are happily part of the Chrisman media lineup. So make sure you're checking out all of the other videos that are available from the Chrisman Media Group.
Typically G-rated.
Hopefully. Also, we are doing live NMLS classes. We've had a few throughout California, and they've just been absolutely great. We have another one coming up on Thursday in Campbell. So if you'd like to do a live NMLS, let us
And you
know.
live
And
in the Silicon
also,
Valley area, that'd be perfect.
just a reminder, November 1st is around the corner. I looked at the calendar this morning and almost fell off my chair. I'm like, I cannot believe this year. Maybe it's just life in general is accelerating at a pace that is remarkable, but yeah,
Oh.
crazy, isn't it?
As you get older, each day is a smaller percentage of your total life. That's
Oh,
why it feels faster.
okay. I'm gonna have to start doing shots right now. All
The
right.
uh the general saying is that life is like a toilet paper roll, right? The farther along you go, the less.
Faster it spins.
Yeah, I forget how it goes. Anyway,
Oh,
seems.
good God. Okay. On that note, speaking
Should
of
we go
things
back to
accelerating,
water up to my doorknob?
yeah, someone's doorknob. Wednesday, we will have mortgage applications. Thursday, we will have retail sales and initial jobless claims. And Friday, housing starts and NAHB housing market index. So we currently today have some green in the market, which is a nice little change. And our 10-year is down to 4.04-ish last time I checked, which wasn't that long ago. So, Rob, we've had a very interesting situation since the Fed cut 50 basis points. This is not out of the ordinary, though, is it? I mean, whole the Fed cuts, mortgage rates go up for a while, but then they come back down. Typically, I was looking at a chart showing I think 40-year history of the Fed rate cuts and how that happens so often where, they cut, the mortgage rates go up, the yield goes up, and then it all comes back down. And so, yeah, and like 37%, by the way, on average overall. So how do you feel about where we are right now in this little cycle?
Well, I need to put in a plug for my commentary for those of you who don't subscribe. Do you mind if I just say, hey, if you want to sign up, www.robchrisman.com. It's
I
free.
just plugged Chrisman Media Group, so
I know, but
definitely feel free to plug the commentary.
the commentary, the www Rob Chrisman thing is a little bit, and the reason why I bring that up is because I've talked about the fact that, and you know me and predictions and so forth on the trading desk. It almost seemed like there was a saying about uh, the gods laugh at those who make plans or something like that. you can't, even if you knew a number, we used to joke about this, even if you knew what unemployment was going to be on Friday, or the CPI was going to be tomorrow, or the producer price index, or whatever, and you bet your entire life savings on it, the market would go the opposite direction than what you thought
Yeah.
was going to happen. And so I continually see successful loan officers and originators, and whether you're a broker or working for an IMB or a bank, they don't pay attention to predictions. They don't bank their business model on Mike, Fred, and Tony saying, the MBA saying, oh, rates are going to be doing this, because you know what, that doesn't help their borrower today. And what helps their borrower today is having the programs and having the service to help them. With regard to rates, yeah, the feeling was that a half a point, leading up to that moment, whether it was a quarter point or half a point, it was pretty much baked into the market. The
Right.
Fed was lagging. I won't say lagging, but the Fed, it was already in the market. And so when the Fed moved to half a point, all right, great. Now suddenly, or as the days went on, the market said, well, gosh, lower rates. That means the economy is going to speed up a little bit. And do the economy really need to speed up? Maybe not. Maybe the economy was doing pretty good. Uh, there you go. Men plan, God laugh, something like that. And so the feeling was that, gee, if the economy speeds up, that means the Fed may not cut another time or two this year. And discussion about even going back up a little bit, I heard one or two people talk about that, but not in any kind of serious way. But the feeling was that rates went up from 2020 and 2021. Rates have gone up. Well, remember that millions of borrowers have had their bottom lines helped by our industry.
Yeah.
And so if you have a fixed rate loan at 3%, you don't care if prevailing mortgage rates are 7 necessarily, unless you have a lot of credit card debt that you're trying to figure out what to do with.
Or you're thinking about moving.
Yeah, or you're thinking about moving. But
And then
I
you do
would
the
say,
math and you decide not to move.
right, the lock-in effect. But I would say that, and I don't have numbers, but I would say that there are a tremendous number of people who are paying 3% or happy paying 3%. And so rates can do whatever they're going to do. It doesn't necessarily impact their biggest payment of the month. Now, that said, if rates have gone up, but the feeling, to your point, Audrey, is that it's generally thought that rates are going to, start to slide back down. And gradually doing anything rate wise is good for lenders, whether they're gradually going up or gradually going down. It's the volatility that hurts hedging and hurts capital market staff. And, you get into extensions or renegotiations or whatever it might be. But yeah, the thinking was that the economic news has been relatively strong since the Fed's announcement. So rates have crept up. Now perhaps green on the screen, nice to see. Maybe we'll see a little bit more of that. But you guys have been in the business for a few years. Nothing moves in a straight line.
Right.
So, but through it all, you're dealing with borrowers and you're just trying to help them with your products and your service, regardless of the interest rates.
Well, so what I find in this market is what we're trying to balance is the rates are better for sure. There are people who would benefit from refinancing, but we are expecting that the trajectory for rates is going to be a downward trend. And considering LOs are on the hook for EPOs, we are being careful. Those of us who have, functioning brains are being really careful about how do we do this? What is the right time? What is the right number? And we keep cautioning brokers and LOs to make sure they're reading their wholesale agreements, because a lot of them are unclear about what they say. And some of the wholesalers are going after LOs and brokers, even when they had borrow paid comp, which you would think would not trigger an EPO. So with all that being said, when is the right time for us to do this so we don't get stuck giving back our commission? And just a little reminder, because I get so fed up with these conversations with C-suite people who have regular paychecks no matter what is going on. And they feel very righteous. And we are, those are our borrowers now, and we're entitled to that, and we invested in it, and that loan is ours. And I'm like, okay, as an LO who doesn't get paid till I close a loan, and if I'm on a W-2, I can no longer deduct any business expenses, et cetera, it drives me crazy because I'm like, none of it seems fair. So how do we balance what is right for the borrower, what is right for the lenders? Because we don't want servicers to take a bath either. Again, we have to be thinking about that as LOs because we want to keep everyone profitable, and it's good for the market, good for the consumer ultimately, et cetera. So where's the balance? And there's no real answer. It's on a case by case basis, but we need to be thinking about it. And again, I think to your point, a man who is not a fan of making projections. I mean, the one holdout, Kevin, remember, Rob Chrisman was the one holdout when everyone else was forecasting recession 2 years ago, 2+ years ago, and he refused to engage. And he ended up being right, by the way.
Time in my life.
Well, you know what? There's a first time for everything, Rob. So I'm glad for all of us that was the one moment. So with that being said, that's why we're all interested. We're all trying to figure out, okay, is this an aberration? Is it not? So when you look at a chart that says in a 40-year period, even though rates spike after a Fed, them lowering the Fed funds, ultimately it will trickle, it will reverse course, and you'll end up down on average 37% in the 10-year yield. So with that being said, it's a lot to think about, right?
Was there a question in there?
It was a comment. You're welcome.
Okay. Well, I'll comment a little bit.
Please do, Rob.
Of course, with recessions come lower rates, but you also have a harder time qualifying borrowers, right?
Right.
So the recession, I'm still waiting for the recession. I'm still waiting for, the inverted yield curve. The yield curve went back to normal. And frankly, I will say that you can, or anybody on this call can torture the numbers. Any number that comes out, you can find something wrong with it or something right with it. You can torture the numbers to try to make the argument that you're trying to make. With regard to the numbers that have been coming out, it's easy for me to sit here, or anybody to sit here and say, you know what, the economy's doing okay. Yep, unemployment around 4%, give or take. Inflation, 2-3%, give or take. Producer price index, blah blah blah. The economy is doing okay. I go out on the freeways. There's bustle out there. The airports are crowded. The flights are full. Airport or restaurants are doing okay. The economy is doing okay. Wages have caught up to some extent with house prices. Housing prices are doing okay, especially in the starter arena. Not so much the higher end, like $1.5 million for a 2-bedroom, 2-bath condo in downtown San Francisco. That's probably going to come down a little bit, but so many markets are doing okay. Inventory has picked up a little bit. So really, this is a pretty good time to be the U.S. economy overall. So you come to a point where you have consumers out there who are spending money, the consumers helping support the U.S. economy. One crack in the rosy picture that doesn't quite fit, but one issue or big issue is consumer debt and credit card debt. Whether it's $1 trillion or 1.1 trillion or 1.2 trillion, it's moving higher. And as you guys know, consumers are paying 25 or 30% interest on some of that debt. If you read your Nordstrom's bill, I think it's like 28 or 29%. That's a really hefty interest rate. And so the consumer's continuing to spend, but they're also paying a price for that. And so you look at the alternatives to that borrower, and you guys and people on this phone deal with borrowers all the time who've run up this credit card debt or student debt or car debt, whatever it might be. And hey, I know we have a 3% loan. Maybe we should refinance and either get a HELOC or refinance the whole kit and caboodle and pay off, pay down our debt. Then you run up against, well, when did I do your loan? Was it 40 days ago, or was it 6 months and a day ago? And you butt heads with the owners, the current owners of that mortgage. It's easy, or I shouldn't say it's easy. I will make the argument that borrowers will tend to go back to the Audreys and Kevins and Eds of the world, because they have that relation. You have that relationship with them, regardless of whether you work for whoever, in this case, American Pacific. But if Audrey or Kevin were to go to work for a lesser competitor, they're going to follow Audrey or Kevin or Ed or
Correct.
whoever. They're not going to say, I want American Pacific. But going, not to pick on American Pacific, but I'll keep using Pacific example. If American Pacific has sold that asset to Fannie Mae and sold that servicing to
Freedom Mortgage,
Freedom or AmeriHome or PennyMac or whoever, well, Stan Middleman at Freedom is not in business for his health.
What?
I know that's a stunner. I know that's going to set everybody's jaw agape.
Yeah.
But Stan now, because he paid, a point for that servicing, he wants that borrower.
Mm-hmm.
And he has assembled a crack team of people there in, New Jersey or Pennsylvania, wherever, in some basement somewhere, to, some consumer direct team, some portfolio retention team, because he paid for that servicing. He wants to keep that servicing. He wants to keep that borrower. So a lot of originators out there, a lot of brokers face a bit of an uphill battle. Yeah, the borrower likes Audrey. Audrey makes them laugh. Audrey took them to lunch. Audrey is a subject matter expert. She knows stuff.
Right. But if they can get 4.5% instead of 6.5%, they're going to go with the 4.5% all day long.
Yeah, even though it's Johnny come lately in some basement in Pennsylvania who doesn't.
So here's a little wrinkle in that idea. And I know that is the prevailing thought amongst servicers and owners of IMBs in the industry. I know that's what they're thinking. And with that, they're only retaining somewhere between 17 and 22% of their portfolios, which I find interesting. Now they're saying that they're going to up that ante. They've got AI working on this, etc. Here's the thing. If you're a good LO, you're not an order taker. And if you're a good LO, you're not working at a call center. And you are not part of that little team that's in someone's basement somewhere taking orders. So if you are a borrower and you're calling that little team, you're going to get what you ask for, but it may not be what you need. And it may not be the best strategy for you. And over time, it could end up costing you way more money, even if you just saved an eighth or maybe even a quarter. So with that being said,
or in fact, that 4.5% rate comes at 5 points when your 6.5% only came at 0 points.
You cannot, Rob, you cannot even imagine how many LEs we see where somebody thinks that they're being quoted a much lower rate, yet there's $27,000 in points on their LE and they haven't even noticed. It is astounding what is being perpetuated out there as a cost savings.
Mm-hmm.
How these things even get through their compliance, I have no idea, because some of the numbers I've seen are crazy. But I've seen people quoted, rates, and they're in their 80s and they're paying tens and tens of thousands of points. And thank God they called me, because if they hadn't, they would have lost $1 zillion, even though their monthly rate or payment would have been slightly less. So it is really important for LOs to remember this and be able to articulate that to borrowers. It is also something that maybe somebody who gets a paycheck every week, whether or not they close a loan, is also thinking about, because there is value in humans who know what the hell they're doing, which some of us do. And I would imagine that most of the people on this call do, because these are the people who are actually interested in what's going on out there? How can I best serve my clients? What information can I gather that I can share with them or help them so I can help them? So this, I know what the narrative is in the industry, but it makes me very unhappy because it's bad for the consumer ultimately. And it's very self-serving for people who are just in it to make money. And I think there should be some balance in there for those of us who work for free way too much. And then those who work for, making sure that they can take their private jet to dinner with their friend. And that's on their P&L for their IMB. So where's that balance? And I don't have an answer, by the way. So feel
I
free.
do.
Oh, good.
Good. Woo!
First of all, I need to be talking about private jets. I need to interject that Myrtle the cat never flew commercial. Let me just
Did
throw
she ever
that.
fly, period?
That doesn't matter, Audrey. Myrtle never flew private or never flew commercial.
Okay.
You bring up a great point. When I talk to loan officers or companies that are owned by, say, real estate companies, a big measure of their success is how much of that real estate company's business goes through that lender. You would be surprised at how little actually does,
Wow.
because those real estate agents have other relationships.
Mhm.
Once again, the point that you bring up is the point that I always tell people when they say, oh my gosh, are we going to go the way of typewriter ribbon salespeople? And I always say, no, this is a people business. People and companies have to play to their strengths. And the strengths of being a person is being a person and having the wisdom and experience and knowledge to help people. And when you help people like that, word spreads. The call center guy or gal, nothing against call center guys and gals. I mean, they serve a purpose, but they don't have the experience and knowledge that people who have been in the industry for a while have. Maybe they'll get it. I mean, it's everybody has to start somewhere. So I don't poo-poo those people so much as like, all right, it's a starting job in this industry. It's arguably a good place to learn the nuts and bolts, but there are other jobs and other valuable jobs in our industry, as you guys know. But getting back to playing to your strengths, you and people on this call, the strength is being a person and having the experience and being able to explain, look, Mr. 80-year-old or Mrs. 80-year-old, here's what's going on. All right. You got to go into this with your eyes open.
Right.
And so the problem that I hear about, though, are when Mr. and Mrs. Jones don't go back to their original loan officer. They just are listening to Johnny come lately in the call center. And that's hard to deal with. I mean, it's hard to deal with if you were the original loan officer. So that's why some of this software that helps the original originator deal with movements in interest rates and events that are going on with their previous clients' lives. That's why so much of that software has gained in popularity. But it is sometimes just a matter of a phone call. Hey, Mr. and Mrs. Jones. Yeah. It's been a year since I did your refi. How's it going? A simple 2 or 3 minute call might result in, $5,000 or $10,000 paycheck.
Right.
But you guys just got to do it.
Refinancing their house is not the only thing that they might want to do, like maybe an investment property, maybe a second home, maybe.
Maybe they want to add an ADU, or it's always something different out there that they want to do.
It is. And then some of the other things we've been talking about lately, we had the FBI on last week, and there are so many scams out there and so many things for people to be aware of. So even if you called and said, hey, I just double checked your title and your deed everything looks fine on there. It looks normal, because there are people stealing deeds and selling properties that don't belong to them. Or you could, give them some pointers and some examples of some things they could look out for. you know, if they're older and they have grandchildren, you know, somebody might call you and tell you they're holding your grandchild ransom. It's all a bunch of bupkis. So there are so many conversations we could be having with our clients, and a lot of LOs are still just sitting around waiting for their phone to ring, an email to pop up saying, here's a referral. And that is not our market right now. You have to be proactive, and you've got to be looking at creative ways to do things. I've talked about this a million times. Like 99% of my volume this year has been brokered, and a big chunk of it is private money, a big chunk. And so it's creative things. And so I was invited to a party at a client's house this weekend, and every person they introduced me to, it led with, we wouldn't have this house if not for her, because, and then they would, I mean, you know, obviously we can't talk about the loan we did for them or even tell someone we did their loan. So when they're leading with, it was really creative what she did, and that's why we have this house. People ask questions, they're interested,
Oh.
they're going to remember that, right? It's not just, oh yeah, she just did what we told her to, stuck us in, you know, a rate and yay. I mean, they don't remember that, right? And they don't use that. Yeah. So anyway, you can
Were there any celebs at the party?
actually,
Where?
funny you say that. Yes, kind of. So anyway, yeah, it was really interesting. Come on.
Oh, come
Can't
on. It's
announce
not
who our
just
clients
us
are on
gals.
national TV
It's just
here.
us gals who like,
Yeah.
musical types, actor types.
With musical types. And actually there was an artist there that is pretty incredible. So yes, it was a very interesting group of people. And again, you want to be invited to these things, and you want
You know, I think
I
Rob's
want to be
upset that you
invited.
didn't. Yeah, Rob's upset you didn't invite him, Audrey.
Didn't I talk to you on my way there, Rob? Or maybe that was the other day, the other thing I was doing this weekend. Anyway.
Yeah,
Okay.
now, you know, it's interesting though, as you were saying, though, you got to watch out for these guys that are, when we did the pig butchering thing with the FBI, and how these guys will, you know, make confidence with, you know, basically it's a confidence game. You get somebody, you get them to trust you, and then you let them think you're helping them make money, and then you steal their money. And that's kind of the whole game of all these confidence games. And sometimes, you know, these call centers, that's kind of how they work. They're just out to get their money. They don't care about the person. They're just there to get the deal.
Yep.
And whether they screw the person out, and like the example was where the guy had, that someone just texted us with someone who was going to save $124 a month by refinancing, and the LO told him that he shouldn't do this, and he got mad at him, and then he realized, wait a minute, you're right. Why would I spend $8,000 to save $124 when I'm going to sell my house in a year? It doesn't make sense, and only us, you know, they're ethical in it, we'll tell our clients this kind of stuff.
Yeah, really, really important. And again, we're often in the position where we really need to be clear about what our value is. And it was something I never understood, you know, in the first big chunk actually of my career, because we're not supposed to brag. We're not supposed to tell anyone anything that we did well. We're supposed to be modest, right? And finally, I realized if you're working for a borrower and you're protecting them from everything, they just think it's normal. They don't understand that you just did 50 black flips and saved their tail. So it is, you know, and again, there is a way to present that and a way not to present that, but you got to let them know what's happening so they understand that you are better than the next schmo down the street. So there you go.
Were there any politicians at this party?
Not that I know of. We do have a comment on the chat that Bernie Sanders and Elizabeth Warren were the guests, and to my knowledge, they are not musicians, nor are they artists. So so that rules them out of hand, right?
Con artists.
Yeah. Okay, so we have somebody in the chat who's asking about HELOCs, a good lender, and you know, of course, we just love to give free plugs to lenders. What I will just briefly tell you what I've been doing. So my clients come to me and they're like, "Hey, I have a 2.5% first, and what should, you know, I need to pay off my $60,000 in credit card debt or whatever it is." So I run the number. First of all, I send them to their lender, their bank, sorry, to see if they can get a HELOC or a second there. Then they come back to me 9 times out of 10. Then I do the math on, does it make more sense to do a second, or it doesn't make more sense to do a whole new first? Figure that out. And then you figure out, okay, based on this person, should I do a fixed rate second or a HELOC? you know, like, so basically you're whittling down your options and you finally get them to, you know, okay, yes,
Yeah.
I should do this
And
or that.
unfortunately, once in a while, it makes sense for them to take the loan where you don't make, okay, you make $350 on a HELOC, whatever it is, like, oh, whoop-de-doo. But you have to go through those gyrations and you have to be willing to do the loan for $350
That's right. Or nothing. I
or
mean, and
nothing.
this is
Yeah.
where the whole EPO thing is. I'm like, okay, how many lenders are out there grinding and working for free just because it's good for the borrower? I mean, a lot of SLOs are doing that, right? Okay. So then, I mean, I've sent, okay, I'm not going to say everyone I've sent loans to. One was a freaking disaster. I'll tell you offline if you really must know. But I've had some good luck with Symmetry. I've had good luck with Amwest with their seconds. Kevin, have you had any others?
My only experience is the one you're not mentioning, and I'll leave it unmentioned
Oh
also.
my God. I try to
You
make
know what? Audrey will mention the musical guests at this party. You guys aren't mentioning lenders. Why don't you send me a text with the information so I will mention it because I don't have any kind of anybody above me
you know what? I have such a better idea. I'm going to send it to you and you can put in your commentary.
that you attended some party with
No.
Keith Urban or something or
Call
Paul
it Second
McCartney.
Lender Sucks. How about that? Put it in your commentary. You can
Was
quote me
Ringo
there.
Starr at this party?
What?
Was Ringo Starr at this party?
No, Ringo, no.
Is he alive still?
Come on, it was in the
Yeah.
East Bay. They were kind of earthy. That's
Oh my God. Okay, so I have some questions for you, Rob.
Oh,
Ready?
a hit. Earth, Wind, and Fire.
What?
I didn't say that.
Yeah, he didn't say that either.
Okay, so I have some questions for you, Rob Chrisman. Focus, people. Geez Louise. First of all, and this is very random and not actually what I want to ask you ultimately, but how do you find all that random stuff you put in the first paragraph of your commentary, like raccoon swarms? Where does that come from? Where?
Did you look at that rack? Did you look at, did you
It was terrifying. I mean, oh my God, they have horror shows with scenes like that in them.
um, people send them to me. I don't mind dropping names, Audrey.
Oh, good.
So,
Good for you, Rob.
many years ago, a friend of mine, uh, said, oh, I'm friends with Steve Wozniak. Okay. Steve Wozniak, Apple.
Hey,
Yeah.
I've had lunch with Steve Wozniak.
Yeah.
More on that later. You guys have similar sense of humor. And Steve likes to send jokes out and like little funny stories and clips and so forth. And why don't I introduce you guys on email? And so he did. And Steve and I, of course, still correspond. And so I think that, as I recall correctly, the raccoon swarm, which was, what was that, Saturday or Friday or something?
Uh-huh.
I think that was from him.
Oh, wow, that's funny.
I saw that one in the news.
But it's amazing. I mean, and the reason why I do that, and the reason why I put a joke at the end of most times at the end of every commentary is because there's more to life than just talking about Fannie Mae and Freddie Mac and interest rates and the CFPB and that kind of stuff. And it's part of I view it when I was on a trading desk. You just don't jump into, okay, here's your position and here's what rates did. Hey, how was your weekend? Hey, I heard about this. Oh, let's tell a Michael Jackson joke or whatever it might be. There was more to life than just hedging. And over time, I learned that people really appreciate something just a little different, especially if I can tie it in. Now, sometimes I can't quite tie things in. And I hear about it from my number one son, Robbie, who will write to me or call me and say, Dad, raccoon swarms have nothing to do with the Federal Reserve. That was a real stretch. Okay, fair enough. But I like trying to tie them in. And like I said, there's more to life than just whatever. And especially if people get a giggle out of it or learn something like, oh, it does take longer to board a plane than it does D plane. I always wondered about that. Look at here's Rob Chrisman writing about it.
Right.
You know, it's just part of
We
life,
agree with
part of
you.
life fabric.
This is one of the things that you either like or hate about our show is it's not just some, I mean, so many of the mortgage shows are just like, wah, 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 wah. I feel like, Charlie Brown's teacher. So anyway, okay, moving right along. You ready? You ready?
I'm ready.
Okay. As you traverse the country, which you do with incredible frequency,
I will be traversing tomorrow morning.
where are you going to be traversing?
Wait a minute.
You haven't sent me your schedule recently. How come? Yeah, I need your updated schedule.
I get if you go up, I guess that's not a traverse, is it?
Okay,
Yeah,
whatever.
yeah.
Travel.
I'm going up to a Banner Bank event up in Portland and Vancouver, which I'm looking forward to. It's a nice part of the world, especially in the autumn.
And
Yeah.
you're gonna get all those fall leaves. Really
The
beautiful
Pacific
right now.
Northwest is beautiful, period. So, all right, well, that's groovy. All right, so as we get closer, I'm bouncing all over the place because I have multiple questions. So let's stick with, are you hearing about LOs becoming realtors too? And conversely, are you seeing new LOs in the business who are or were realtors? Because I'm hearing more about that, and I have personal opinions about it, but what are you seeing?
Yes,
Yes,
I
for
am
sure.
hearing about that. From my limited vantage point, just like DSCR loans or just like non-QM popularity has increased because as a loan officer, if I only do Fannie, Freddie, FHA, VA, and every borrower is so precious, a borrower comes in and I can't help them because they're self-employed or they want to get a loan on 10 acres with a yurt on it. If I can't help them, that's money out of my pocket. If I'm sending them, yeah, it's a great karma thing to send them to my local credit union pal, but I'd rather be able to do that loan. And so more lenders and more loan originators have learned about non-QM, DSCR, reverse mortgages, bond programs, jumbo, whatever it might be. Well, I would put doing real estate stuff in that bucket as well, because people need to eat. You need to earn a living. And if there's a way to do that, I'm going to take a look at it. I've certainly got time to take a look at other avenues. The flip side of that, though, and I hear about this all the time, is the loan officer mentality is different than a real estate agent mentality. Loan officers, or I should say, real estate agents, they're almost used to being called Saturday night at 7 o'clock because of some negotiating point or something's not working out or they thought of something. Real estate, the realtors, real estate agents in general, they work oftentimes Saturday, Sunday. Loan officers, maybe not so much. And so I've heard that and the requirements are different. All right. So from what I hear is it might be worth exploring in theory. When you get into the practice of it, it oftentimes doesn't work out.
No, because it's too much work to get that one deal close.
It's a lot of work.
Well,
Yeah.
so the
And if
only
you're doing both
conversation,
sides of it, there's a lot more work. Unless you have teams that are doing it, you're like doing it in name only.
with one notable exception, and every time I say this on here, I hear from him. We are professionals, or we should be professionals. And if you are a jack of all trades, you are a master of none, typically, not everyone, but most people. And you cannot serve every part of a transaction equally. So when you have that much invested in one transaction, it makes it very difficult to be objective. And so when I'm looking at a situation, like I just had one, and the buyer should not buy, period. We got some reports back and it was just, there's no way. And because, I mean, if I had another, $50,000 in commissions on the real estate side at risk, would I be so objective? And the answer is probably not. And so I think that, again, it's a full-time job to be a good loan officer. it's a full-time job to be a really good realtor. And so anyway, but I'm hearing this more and more, and I'm just, waiting to, I don't know. It's going to be interesting to see how it plays out. And by the way, what kind of volumes people are doing when they're trying to double dip, right? I mean, are they really killing it or not? And what are people missing out on when they do that? So curious. Okay. So there was a huge fine with TD Bank. So they pled guilty to, and I thought this was very interesting because again, we've had so many cybersecurity and FBI and compliance people on recently. So we've talked about the fact that the regulators, and actually the regulators have told us this too, if you don't have proper checks and balances in place and procedures to protect your client's identity and protect against illegal activities, they're going to look at you with more scrutiny. So anyway, so TD Bank was fined $3 billion with a B dollars and is pleading guilty or pled guilty to not building proper anti-money laundering systems. So we're seeing more of these things, right? But these fines are crazy. So $3 billion, where does that money go? Do you know?
Who fined them?
That's a great question. Who did find them?
And it's 3 billion with a B as in.
That would be with a B. And again, we see these fines throughout, like the CFPB, like massive fines, millions and millions and millions of dollars. Where does that money go?
Well,
Yeah, where does it come from? Because I don't see banks with that kind of money. I mean, TD Ameritrade is a big company, but $3
yeah.
billion really hurts the bottom line.
Well, Citibank is
Fines.
under a lot of scrutiny right now too, and they do have that kind of money. Thank you very much. So it is okay. Guy is saying Treasury or make customers whole.
Yeah, depends. If it's the Department of Justice, it has one path. If it's the CFPB, it has a different path. If it's a local state, regulator, has a different path again. There was some feeling that when the CFPB was coming into power, 10, 12 years ago, a lot of companies said, whoa, we don't want the CFPB looking at our bank account and basing their fine
on what you have in their bank account.
Exactly. So we're
Same
going to
same way the federales do it in Mexico. They, take the two guys, arrest them, put their two wallets together. Okay, that's the fine for one of you guys. Now go have the other one out and go get the money for the other guy.
Right. Well, Audrey, we learned what Kevin does in Mexico now.
Yeah.
So
avoid the federales. That's what I do.
Yeah. What's I think we've all gotten or received letters in the mail or emails saying, "Oh, you are part of a class," or "Sign here if you want to be part of a class action lawsuit," and you're just kind of like, "Oh, whatever," and then maybe you end up with a check for $8.12, 3 years from now.
You got $8. I only got $1.56.
Right. It's like, what is this? And then you think, and it's part of some settlement. But by the time they took all their overhead out, it was
the attorneys made all the billions. You got $1.86.
Oh, so the attorneys. Oh my God, how stupid of me. I should have realized that. Duh.
They get a share.
Jeez Louise. Okay, that's crazy. And by the way, we have a comment here from Cheryl, and she's saying that she does real estate and loans. And I happen to know Cheryl. I believe her, and I know that she does it well. I know she does. And our other friend who does both, he does it well too. But they are unicorns. Let's just keep it real. So anyway, yeah, I know there are exceptions to the rule, but I think the rule stands. Anyway, it's a little scary for some people. Maybe we should be able to test into it. Like, I believe that driving is a good example of this. Like, everyone has a driver's license, right? So the fact that you can't drive your car over 55 miles an hour in the fast lane, that is your problem. And I should be able to test into the fast lane, and you should be testing out of the fast lane. So again, if you are doing real estate and loans, there should be a bigger test, right? And let's just make sure you're doing it right, like these people are. And then everyone else out.
My daughter is taking her driver's test, as you know, next week. And she was commenting about, I think I'm ready. I'm like, listen, you're more than ready. You know how many people out there have driver's license and they're idiots? You're smart. You'll be fine.
Well, I don't necessarily know that brains is going to help, but it isn't, it
But
won't.
we see the dumb drivers all the time. Generally, they're driving
The,
what Priuses
Well,
and Teslas, right?
I've driven with Kevin and he treats me like I'm a beginning driver who doesn't know what the hell I'm doing. So, yeah, I'm sure she's gotten quite an education because I know I have, even when I didn't need it. Okay, moving right along. I want to talk about 3D printing houses, which you expounded on at length in your commentary. That would be www dot, what again, Rob?
Rob, Chrisman, M.
geez, you know.
Okay. Anyway, the idea of printing houses for me is a little tough to like wrap my little brain around. Now, I understand that it's been done. Their
That's
entire
why I included the video. The video shows how they do it.
their entire subdivisions, which I find fascinating. Are they getting conventional financing?
Well, I should ask you that question. I don't know. I don't know. They're basically concrete, and
Definitely not
I
here in
think,
California.
you know, so the quote I had, if you read the article, a brilliant fellow named Mike Simmons with Access AMC,
Yep.
he was in touch with Fannie Mae about it, and I don't know if he ever heard back whether Fannie Mae does that or not, but it's really too bad. The point of my point being, I think it was yesterday, right? My point being that when you hear these things about, oh, we can't get the labor, oh, we can't get the land, oh, we can't get the wood plywood is $80 a sheet or whatever. When you hear certain complaints, or oh, the wind blew my house down, well, there are solutions to it that are available. And the point I was trying to make is, why don't we do more of that instead of, oh, let's put up another wood house. Well, we can't get the labor because of the immigration problems, or whatever. There are solutions out there that if only we were able to do that, I think would help. But then to your point, Audrey, it's like, all right, is Fannie Mae or Freddie Mac, are they going to buy those loans? Or do we have to wait for 2 or 3 years for Fannie Mae or Freddie Mac to do some kind of analysis to figure out if they are agency eligible? Well, then hustle up, so.
Yeah. Yeah. The wheels at the GSEs and every major institution move very slowly, which
And that's one of the advantages that some of these non-QM lenders have, or I shouldn't say lenders, investors have, is they don't necessarily have to follow agency guidelines. So they can step in and say, yeah, we'll do those loans because those loans on those houses make sense because those houses make sense. Let's
Yeah.
go.
Yeah. Okay. So speaking of GSEs, it's on my list. So I'm hearing again about them coming out of conservatorship, how important that is, and that should be happening imminently. And the reserve requirements that I've seen around when they can come out, I don't even know. I can't even do the math on how we'll ever achieve those numbers. And so I'm just curious, what number one, could you walk us through the pros and cons of them being in or out of conservatorship? And I won't ask you to prognosticate on whether it will happen or not, but can you walk us through what parts are good, what parts are not so good?
Can I put in a shameless plug for another Zoom call?
Oh, for sure.
So Rich Serbinsky and I are going to interview Mark Calabria on Thursday.
Oh, interesting.
Mark Calabria, and I'll have a blurb in tomorrow's opening paragraph about Mark Calabria, who used to be in charge of the FHFA
Yes.
during the Trump administration, and he was very gung-ho about
Yes.
not
Yes,
only
he
letting
is.
them retain their earnings, but releasing them into the wild like feral agencies, feral companies. That's exactly what we were going to be talking about. And he is going to be, I mean, he's in a much better position Thursday at noon Pacific time to talk about that. I recommend people tune in. I'll have the link tomorrow in the opening paragraph. But that said, I think it's very difficult to encapsulate what that means to release them from conservatorship. Now, if you go back to 2008, bringing them under conservatorship was much easier
Mhm.
than releasing them. When you release a Fannie Mae or Freddie Mac and say, okay, they're on their own. Let's say you are a Japanese money manager who, 3 years ago or anytime during conservatorship bought, $1 billion worth of Fannie Mae, Freddie Mac securities.
Mhm.
You bought it because it was backed by the US government. What's going to happen now if a loan goes bad? Is the US government going to stand behind that loan during the conservatorship period if now they are outside of conservatorship? How does that work? How do the guarantee fees work?
The
How
same way
does
it worked last time.
what's that?
The same way it worked last time. They messed up so badly, the government had to step in and fix things. I would say that's probably how it's going to work the next time.
There's definitely that opinion out there. Um, it's not so simple. And yes, they've been retaining earnings. They're worth hundreds of billions of dollars. Good for them. That's a lot of that is on the back of seller servicers like who are on this call, who have to deal with the guarantee fees and have to deal with the buybacks that the agencies
And
are.
by the way, the consumer who ultimately pays the price for all of it. But anyway, go
Yes.
ahead.
Yes. So you have that situation where the what ifs, the what if something goes wrong? What if the government has to step in again? That's like the worst nightmare. And so during the Trump administration, that was kind of the next step. If Trump had stayed in office, they were heading toward that. They were heading that way.
Yep.
But it's
They're really
very
close.
difficult, and there's so many things that go on underneath and behind the scenes that make it that difficult. So the last thing to your point, Audrey, is when you have the US government behind you, Fannie Mae and Freddie Mac can offer one kind of mortgage rate. If they were on their own, like Deep Haven or Angel Oak or Veros, or pick any number of non-QM lenders, non-QM investors, it is thought, the figure that I've heard is that general Fannie Mae, Freddie Mac mortgage rates would go up by 1 to 1.5% overnight.
Rate
And so
up 1.5%.
do we want that?
Ow,
Do we
why?
want that? No, we don't necessarily want that. But that is that premium for not being backed, not being under conservatorship.
What is it, the gap? What's the premium you thinking?
Well, I've heard 1 to 1.5%. So if mortgage rates right
But
now,
aren't we already paying a point to almost 1.5% over what the rate should be right now anyway?
yes, and you have high guarantee fees.
Tons.
Yeah.
Yes.
No.
And the LLPAs that someone pulled right out of their, well, just choose whichever orifice you prefer.
Yowza. Anyway, sorry, my mind drifted off there. So yeah, I would love to hear where you're hearing a sudden ramp up of interest in doing that again. Because I think it's one thing to talk about traveling to Mars. It's another thing when you actually look at doing it, completely different.
It is from somebody who, and not directly, by the way, from somebody who had a conversation with a person who is being considered should the administration change for Treasury Secretary.
Yeah.
So it's interesting. And I've heard it a few other places recently too, but that was like the one that I went, oh, wow. Okay.
Yeah. Well, I mean, it's certainly something for the industry to talk about and be aware that that's a possibility. But the immediate likelihood is not good. And the ramifications, I would say, aren't necessarily good either.
So you think it's better probably to keep it the way it is?
If you want to get a loan,
Okay, so
Wow.
then let's talk about those amazing profits for Fannie and Freddie, which pisses me off every time they come out in the last 2 years when everyone else is going out of business, sucking wind, drawing on their equity lines to survive from month to month, and they are blowing the tops off of their profits, again, on the backs of the consumer, because that's ultimately who pays the price for that in their rates. So
We might want to, I see, I don't have my reading glasses on, but Mr. Simmons weighed in on the 3D question. Do you want to read that, Audrey?
Yeah. Oh God, our good friend Michael, he's the best. Michael Simmons, who is one of the owners of the Access Appraisal AMC, he says in answer to the 3D question, the GSEs will lend on 3D printed homes. It depends. Of course, that's the answer for every single question in the mortgage industry. But I believe certain conditions must be present. I also believe it is an issue of marketability.
So in
So
other words, it has to be, you have to have 3 other 3D homes made to comp to in order
if
to.
unicorns are flying in the sky and the angels have sung, you might be all right. It might happen.
Yeah, it's like your dome home in Berkeley, you know, there's 11 of them. If 3 of them sold in the last quarter, then maybe you're okay. But if you're not, you're out of luck.
Okay, he says not true. Standard qualifying. Come on, Michael, work with me here. He said standard qualifying. So we'll see. I mean, I don't know. I mean, Kevin and I keep talking about as these hurricanes, and again, we're from California where everyone's like, oh my God, the earthquakes, you must be so scared. How do you live there? And we're watching the Midwest and the East and the hurricanes and the tornadoes and the
The
cyclones and
snow
the
every
hail.
winter and
And we're like,
up
what
north,
the?
like how do you deal with that stuff?
And how do you put another mobile home in the path of all that? Like, how is that allowed? So why aren't we building with cinder block or,
Well, the same thing too. Yeah, you know, we build homes in California that would stand when we get a 5.0 earthquake. It's like, oh, that's like a truck went by. But in the world, the rest of the world, they got a 5.0 earthquake, their houses all fall down.
Just
You
to be
know,
clear, a 5.0 is a little more than when the truck went by. I mean, depending on where the epicenter is, of course.
oh
So
yeah, no, I had a 3.0 hit right a
that's
block away
nothing.
from my house. A 3.0 right underneath your house, you will feel it. It feels like the whole
Feel
house
it, but
lifted
so
up a foot and dropped.
yeah, nah,
3.0. That's nothing. I used to feel
nothing.
3.0 when Myrtle would run down the hall.
Yeah,
No, let me know when it gets to 5 or 6.
yeah.
Oh my God. Um, okay. So, all right, we're getting some questions in the chat about
And
like
we're running out of time.
the structure of homes. Listen, we are going to milk every single minute that we have with you to its max. So you just sit tight and look pretty, okay?
That's
I
not
that.
easy.
what?
Not easy.
I have told Rob previously that he needs to stand in front of the mirror and practice smiling. Today, we have seen smiles from ear to ear. It's just been delightful, Mr. Chrisman.
It's
Delightful.
gas. It's
What?
gas. Gas.
Oh, maybe. Okay, never mind.
Usually start off the phone call with you talking about water up to her doorknobs.
Okay, you, my friend, you, and it's on video. You said that, not me. All right. So I just want to talk for a moment, one last moment about climate change and the climate related happenings across the country and how that's impacting lending. And again, what are you hearing on the ground as you travel, not traverse, travel around? And what are people saying we should do about all of it? Insurance, all that. It's a mess.
All in 45 seconds.
Yeah.
Just
You got
focus.
45,
Focus and
go.
answer the damn question.
So I wrote about it today again. When I write about it, I inevitably get people emailing me, scolding me, saying climate change isn't real.
Ah,
Why do I even bring it up? And there are those who say, well, climate change is purely natural. It's not man-made. So there's that, politics enter into it to some extent.
who cares? Man-made or not, it's climate change. It's changing,
That,
right? So let's
that's
focus
what I
on
say.
that.
That's what I
Yeah.
say. And I
Yeah.
say, I don't care if you believe it or not,
Right.
but if the agencies believe it and investors believe it and servicing buyers believe it and insurance companies believe it,
And
then
data
it impacts your
collectors like
client.
ICE and CoreLogic, they believe it.
It impacts your client's rate. You better figure it out.
Yep.
And as you know, there's no easy solution, Audrey and Kevin, because if you're talking about insurance, every state has their own insurance fiefdom. And so there's no federal, czar of insurance that can do things related to insurance. I wrote about in my opening paragraph today about halfbacks, people who have moved to Florida from Ohio or Michigan or Illinois or Wisconsin are now saying, whoa,
Whoa, I'll take snow.
I don't think so. Let's go back. We'll go halfway back. We'll end up in Tennessee or Kentucky, North Carolina, wherever.
Yeah.
And so people are tending to vote with their feet if they can financially. I know that a lot of families can't. A lot of
Right.
people are the only thing they can afford is a mobile home in the hurricane's path in Florida, and that's a problem. But people tend to vote with their feet.
They do.
Interesting. Well, I will just say, I actually wrote a response to you about the halfback comment, a very snarky response, and then went, I probably shouldn't put that in writing, and erased it and moved on with my day. So anyway.
So now you want to say it out loud?
No, I'm on my, come on, Rob, I'm on my best behavior right now. Just work with me. I can keep it together for an hour a week. This is it. So let me just, work it.
Then we're over.
All right. All right. Well, with that, we are over it. It is really great to see you. And thank you so much for being here today. Always a pleasure. And to everyone, go get a loan. There's plenty to close. Don't wait for the rates, but it's going to be okay. They're going to come down. All right, kiddies, have a great week.